to go back live on all the other platforms while you guys are on Zoom. Again, I was asking if you have any questions, make sure to put the questions on there. So far, I just wanted you to know that I could hear you. Okay, so that was the only comment that we had from the Zoom platform, and we are also monitoring the Facebook platform and the Instagram platform to see if you guys have any other questions. All right, in two minutes we're gonna go back to the other platform, and then let me make sure that I can share my screen. Is it still there? Let me make sure I can still share my screen. Hold up. Was it here or here? Perfect. I am back to. Okay, I'm just waiting for. Okay, so we are back live on all of our major platforms. And again, we just took a 5-minute recess. Thank you guys for sticking up with us. We have one more section to go, talking a little bit more about some of the business changes. Now, before I go in there, I know somebody who joined the live on Zoom wanted to know about their business structure. So we're going to do a little bit of structure talk when it comes to businesses. When it comes to businesses, you understand you can always choose to have a tax basis as a form of accountancy for your business. You can use some of the simplest format to make sure that your business is operating the way that it's supposed to be, with formality, right? Corporate mindset, you may not be at that level, but at least make sure you have, you register the business. That's one of the very first thing you want to make sure you do. Have your business registered. Have an EIN number, an employer identification number, or a tax ID, right? The EIN number or the tax ID. And usually when I first start to work with people on taxes, I always ask them to give me that EIN determination letter so I know what types of structure that you chose for your business. Was it an LLC single member? Was it an LLC multiple member? Is it a partnership? Is it a C corporation? Is it an S corp? Because it depends on the structure that you selected for your business. That's going to dictate what type of form that you're gonna need to have. So again, at least make sure you register the business, you have an EIN number, you have a bank account. That's the third thing that I would say most important for me when you first start your business. You got to make sure you have a bank account. Why is that important? That's important to help you monitor the business cash flow. Every income that is coming when people are paying you, because right now we do business on so many different platforms. Zelle, we receive payment on Zelle, we receive payment on other means that's coming. You got to make sure those things don't go to your personal account. They go to the business account. That's another no-no, a big no-no. Do not commingle your business account with your personal account. You want to make sure all of the cash flow, all of the money that is coming is going straight into your bank account. And then second, you have the bank account. If you're having expenses, make sure you write checks. Every expense flow out of the business account. At the end of the year, or at least on a quarterly or a monthly basis, I always recommend that you have some types of bookkeeping being done. The bookkeeping is really where you're able to sort out, organize, analyze all of the transactions that are flowing through the business into the respective accounting system. That way you're able to do some sort of assessment about your business. So structure talk is very important. And pretty soon, you never know, you may want to do some other transaction. You may want to buy a house, right? You may want to get a loan from a bank. They're going to ask you, and sometimes even dealing with the county or the city, they ask, and if they have a grant or something, and they're asking you for business documents, they want to see that you're formal, you have a bank account, you're able to produce some types of financial statements, balance sheets, income statement. So it's important to take those steps and make sure that your business is registered, you have an EIN number, you have a bank account, and that you're monitoring the business constantly. Now, let's just talk a little bit about business changes within this OB3 that we keep talking about. Corporate tax. Corporate tax remain at 21%. You see, earlier I show you what the individual tax rate was like, and I show you 7 different brackets of the tax rate. And by showing you those 7 different brackets of the tax rate, you saw as an individual, you could be taxed all the way to about 37%. But if you are a corporation, you're capped at 21%. So this structure thing that I'm talking about, sometimes it may make better sense to have a corporate structure as opposed to a personal structure where your tax rate is way higher, right? On a corporate structure where you stay at 21%, again, depends on income level, depends on how much taxes you're planning to be able to pay. So let me go to the next slide. I hope it's okay. For businesses, one of the biggest change I favor in this is the qualified business income deductions. It allows you to take 20% deduction for qualified business income. Just like I was talking about earlier, when it comes to the standard deductions that you didn't have to show anything for, is the same thing here with this business. Whatever your qualified income, 20% of that on the business side is already considered a deduction that you don't have to show any receipts, any documents, or anything for. It's a big win for the small business community when it comes to the 20% deductions on the qualified business income. So that's something that I wanted to emphasize on for you. Rather than expiring in 2025, obviously, again, there's a phase out component to it. Up to a certain threshold, it phases out, meaning you're no longer gonna have the whole amount. Now, the 100% bonus depreciation reinstated permanently for assets placed in service after January 19, 2025. What does that mean? Right now, as a small business, this allows you to write off major property, plant, and equipment purchases that you do during the year. Often, the way we deal with this on the accounting side is to have you on a straight line basis to depreciate the assets over 5 years or 7 years, depending on the useful life of the assets. But with this 100% bonus depreciation, it allows you and helps you to be able to say, you know what, up to a certain amount, I can write it all off in this current year of acquisition, which is a very, very good thing for small businesses who like to do major purchase. Those of you guys that are truckers who purchase trucks, who purchase big equipment in bakeries and whatnot, you able to do those write-offs in the year that you purchase this equipment. And I think that's a very good thing. Since we're running out of time, I'm not gonna keep talking more about the detail on that. Now let's move to one of the favorite point that I wanted to talk about, the opportunity zone. What is opportunity zone? I need you guys to take some time to do some research on the opportunity zone, because it provides opportunity zone benefits extended to 2029. So that's the new version under the big beautiful bill. 10% basis increase for investment held for 5 years, 15% previously at 7 years, reinstated for investment made before the end of 2026. New OZ, opportunity zone authorized, and tighter oversight introduced. So the opportunity zone is kind of like when you have certain underserved area, disadvantaged areas, right? Identify them where there are real estate properties. It could be any types of property. If you purchase a property or invest in those areas, what that allows you to do is to benefit from the equity the property is going to build over time, where after 5 years or after 10 years, you're able to do what we call a step-up basis, where I know we are always concerned about capital gain, where the capital gain is pretty much erased or eliminated due to the step-up basis. A simple example, let's just say you buy a property in opportunity zone for $150,000, right? And then 5 years later, that property is worth $200,000. Technically, you got a $50,000 gain technically, right? Because I'm not counting like improvements and stuff like that. So it's a straight example. 150, and 5 years later, 10 years later, let's say the property is worth 250,000 for that matter. So you basically have $100,000 capital gain that you need to worry about. But if it's in an opportunity zone that you've invested, that you've improved after 10 years, that $10,000 is like a step-up basis. It's like the even basis. It's like a preserved basis for you where it completely eliminates, where there is no capital gains. I think that's a beautiful thing, but that's only in the opportunity zone. Right now, the way we deal with capital gains, we have something called a 1031 exchange. A lot of people take advantage of the 1031 exchange, but it's a little more complex. You have to go through an intermediary, and then there's a process where you got to identify like-kind properties and whatnot. But to me, I feel like we need to know more about the opportunity zones, especially those of us that are in real estate or investors that are interested in this area. We can do a specific webinar just to talk about opportunity zone where we talk about different scenario. I think this is a win-win situation, and it's a very good program, so to speak. What else that I want to talk about beside the opportunity zone? Let me see what else I have. I'm gonna pass through this. The qualified small business stock, energy. This is something that is eliminated, where people used to, when they do certain project in their house, for let's say they do new window or solar, because the solar guys, they love to tell people about having tax credit, but that's taken away now. So it's no longer available after December 31st. So this is gone with, so no more energy credit on the residential side. Immigration and asylum, there are new fees being introduced, right? On the regulatory side for people that are seeking, there's $100 annual for asylum seekers, $550 for employment authorizations applications, $500 for temporary protected status filings, and non-immigrant visas now cost about $250 each. So all of that is part of the bill, and believe me, a lot of people didn't know all of these things are stooped in there. Medicaid and ACA subsidies. You guys heard of all the big fight that was happening in Washington with the senators, with the House,
shutdown.
The shutdown and all that. It was a lot about this fight, right? The current government want to do some cuts in those programs, whether Medicaid or US ACA. So $1.2 trillion in cuts to Medicaid and the Affordable Care Act. Stricter eligibility for renewal now, work requirement for beneficiary age 1864. You have an 80 hours work requirement, more frequent income verification from annual to semi-annual. So it's a lot of changes that happens in that area alone. Again, we call it government benefits changes. SNAP food stamp. Food benefits. There is an extension through 2031 with some major reform. 80 hours monthly work mandates for adults between age 18 to 64. Imagine, okay? I mean, I'm just telling you what the policies are here and the practice and the eligibility for it. So I'm not gonna go into personal opinions whether I agree to or not. But hey, just know that you have an 80-hour requirement for that. Increased states accountability. States with error rates greater than 6% must share up to 70% of the administration cost. So that's for those states that deals with those type of things. Pell Grant. Now, I'm going to take a few minutes to talk about that, because I know if you are a student if you have student loan period, this impacts you one way or another, right? If you have student loan period, this impacts you one way or another. So what are some of the major reform that this bill did for those of us that have student loans? I do have student loans. I'm still paying for them. So this concerned me too, right? So 10.5 billion replenishment of Pell Grant shortfall. What are the reform? Reforming the income-based repayment and expanded repayment options for parent and part-time students. So they're having caps on graduate loan borrowing. So for unsubsidized loans, no more than $20,500 per year, a lifetime $100,000. No more than that you can take. If you are if it's professional degree, 50,000 a year, no more than 200,000 lifetime. Now let's just go into the new student loan repayment plan. Currently, we have a number of different plans. I didn't even know their name until this bill. We have the current plan that we have right now. They consolidate them into two options that will be effective January 1st, 2026. July 1st, 2026. This will be this will be when these options will be applicable, right? All of the SAVE plan, the SAVE defined as saving on valuable education. Payee plan, pay as you earn. I didn't even know these things, their name. IBR, that is income-based repayment. ICR, income contingent repayment. All of these plans are now gonna look into two options. First, you're gonna have a standard repayment plan where you're gonna have to do fixed payment over 10 to 25 years, depending on the loan amount. 10 to 25 years, that if you choose that option, this is what you do. Or a repayment assistance plan, we call it RAP. Payments range from 1 to 10% of AGI with 80 remaining on balance forgiven after 30 years. I know a lot of people are gonna be like, okay, I probably wanna try that because if I do payment range from 1 to 10% of AGI with after 30 years, I know, well, after 30 years, you know, that's a long time. So there's a minimum payment requirement, $10 a month, and forgives the remaining balance after 30 years. So if you show that you really cannot pay, and then you fall under that plan, at least $10 you know you're gonna have to pay. Now, what about what happened to new borrowers, and when do we have to make that decisions for current borrowers? For new borrowers, post July 1st, 2026, they must choose between a standard plan or a RAP plan, just the one that I just tell you earlier. Now, current borrowers, we call this legacy plan, will transition by July 1st, 2028. So we have a little time. We have until about July 1st, 2028 to choose between those two available plans. In the meantime, we'll continue to play with one of those four categories. But at least know that these are the changes. These are the plans that you're gonna have to choose from going forward. Payments under the RAP will count towards PSLF, eligibility, ensuring continuity of public sector worker. So it's a lot of stuff that I believe I just went through with you. And let me see, what else do I have? We had some stuff that we wanted to talk about, employee benefit changes and all that. But I think since we're hitting the 10 o'clock hour and we were supposed to be here until about 9:30, I'm gonna wrap it up and save the rest for possibly another show, another presentation, another webinar where we can talk a little bit more, because I feel like each and every one of these provisions in their own can basically take a lot longer to talk about. Then we can go in detail about scenarios, example, how that apply in different cases. But for tonight, I feel like I've given you guys enough to think about, and I'm pretty sure many of you are saying, yeah, I learned a lot through this. Now let me go back and circle back with Nelda while I'm checking the platform on Zoom and other places before we wrap it up, because we just hit the 10 o'clock hour. We were supposed to be here until 9:30. It's so much to talk about, folks, so much to talk about, but I'm glad at least we're able to do that. Any questions, Nelda, what I'm checking with the platform on Zoom?
The student loan section is really traumatizing to me.
Yeah?
Yeah. For me, that's the biggest issue.
Okay. I see.
When you have young children, I'm thinking about, what about loan deferment?
Okay.
So that's my biggest issue right now, is a student loan.
Yeah, I have someone who says, Katiana, I definitely need more info on the loan portion myself, because obviously it impacts all of us, and definitely each topics need their own discussion by itself. That is true, because I'm just basically running through all of it just to make sure we're able to capture it. It's just to tell you, to draw attention that there's so many provisions within this bill that impacts all of us in so many different aspects. So I can always come back live. I can always come back and do small group session just to go in detail, because this is practically a big overview of everything, just so you know it's there. And I'm glad you guys were able to watch and ask some questions and gonna think about some of this. So we're gonna wrap this up. And again, you are watching us under the different platform, an overview of the one big beautiful bill, and that we lay out for you some of the key provisions that we just discussed, live from the office, Matterswell Corporation, and we were able to be live on Matterswell Media Network, through our YouTube channel, through our Facebook channel, and through our Instagram channel. Our offices is right here on 773 Northwest 111th Street, Miami, Florida 33168. If you have any questions, feel free to reach us at the office. And I believe I give you guys the office number from the beginning. Let me make sure I give that to you again. It's 786-655-6226. 786-655-6226. You can always call us and reach out to Nelda directly, as she will most likely give you an answer. Feel free to comment. Feel free to reach out to us or visit us straight at the office. And I've given you those different websites that you can go online if you want to initiate applications for a loan, if you want to discuss real estate, if you want to discuss your specific facts and matter for your business, for your taxes. Know that we are here helping. It was a pleasure to be with you guys tonight. And again, I'm going to leave it for one more time. If you guys have any last questions, so we can wrap it up and close for the night. Bois, nailed that. Bois, I know earlier you had a question. I just want to make sure. I just want to make sure I handled it. What was the question? You good? What about stream expert? We good? So far, so good. All right, guys. So I think we're gonna end it right here. It was a pleasure being with you guys. Like I said, we're gonna continue this conversation in their respective topic. Feel free to call us. Feel free to send your questions. Feel free to stop by the office. Let us know how we can help. Thank you for watching. It was a pleasure being here with you. Until next time.